Hello, viewers and investors. Welcome to the fifth edition of Investor Awareness and Education, spearheaded by Mirae Asset Mutual Fund and powered by Outlook Money. I'm Nidhi Sinha, editor Outlook Money, and with me today is Mr. Vaibhav Shah, who's the head product marketing and corporate communications at Mirae Asset Investment Managers India Private Limited. Welcome, Mr. Shah. So to give you an introduction of Mr. Shah, he comes with a rich experience of more than 15 years in the field of financial services and stock markets. He has been associated with Mirae AMC for over 10 years now. That's since 2011, right, Mr. Shah?
Right, Nidhi.
Before joining the AMC, he was with DBS Bank and ICICI Bank. He has also been associated with organizations like Carby Stock Broking and India Bull Securities. So as we all know, mutual funds come in various categories, which have become set in stone now with SEBI's categorization rules a few years ago. While most retail investors are now aware about the broader categories like equity and debt, with fund houses launching various financial literacy campaigns over the years, there are some categories that could still stump retail investors. A case in point is, of course, thematic funds. Awareness is, of course, the key, and it is important to understand what you are investing in before including a mutual fund in your portfolio. So today we are in conversation with Mr. Shah to help our viewers and investors understand all about thematic funds. He'll shed some light on how they work, what are the risks involved, and how suitable they are for investors' portfolio, among other things. So let's begin with the basics, Mr. Shah. What are thematic funds to start with?
So, thanks, Nidhi, for having me on this webinar. So like you rightly pointed out, that mutual fund comes out with a lot of different types of schemes. So we have large cap schemes, mid cap schemes, small cap schemes, which you can categorize as funds based on a certain market cap. There are different styles of investing, which is growth style, value style, and those are different styles in which funds are being managed. We've also seen a lot of sector funds being there on the mutual fund space. What actually differentiates thematic funds from sector funds is we'll try and decode today. So we have seen that there are many sector funds like pharma fund, technology fund, which have been present. Now, when it comes to sector funds, you actually invest in only one sector. But a theme is a culmination of many such sectors. So let me give an example of banking and financial services. In a banking and financial services theme, you would have various segments, which is including banking, NBFC, insurance, you have mutual funds, broking, wealth management, all as a part of the banking and financial services theme. In a previous role, you would have seen a banking fund would invest only in banking stocks, and that is classified as a sector fund. A thematic fund has businesses which are ancillary and work within the same space. So a financial services fund will have definitely banking as one of the core pillars, but it will also have other financial services segments like we discussed. So thematic funds are funds which work on a certain style or certain theme of investing and provide a very different option for investors to look at investing.
Okay, that was quite informative, Mr. Shah. So moving on, are thematic funds risky in any way? Because that is one thing that we hear a lot.
Yeah, so I think so. Always we keep saying that first you should know where you are investing, and the risk comes if you don't know where you are investing. So thematic funds are a beautiful place to make an investment if an investor wants to play a certain theme and he understands what the theme stands for and the long-term growth prospects of the theme. When it comes to thematic funds, usually the risk factors are that it is slightly more concentrated compared to diversified funds. In most of the diversified mutual fund schemes, you would see about 50-60 stocks as a part of the portfolio, while thematic funds, you would see the number of stocks being only about 20-30 stocks. Second factor also is that the concentration in a diversified fund is spread across many sectors, while in the case of a thematic fund, it will be spread across few sectors, like we had discussed in the example of banking sector. Right. So the concentration is restricted to lower number of securities and few sectors, which means that the concentration risk is higher. A
Okay.
second very important point that I wanted to highlight, Nidhi, is that not all great themes actually translate into market returns. And this is something that all of us need to understand. Over the last 10 years, we've seen real estate prices, maybe more than doubling in many parts of India. In fact, maybe going up even 3 times in the last 10 years. But the real estate sector wouldn't have given that kind of returns on the stock market side. So you would see great themes did not translate into great returns. And we have also seen this experience with, say, an infrastructure sector as well. So investors need to be cognizant of this fact that if you are able to spot a good theme, do you have the universe of stocks available to capture this? And that is a second point investors need to look at. And third, I think so, is because thematic funds invest in one or more sectors, they become more cyclical in nature. What do we mean by cyclical is, in case of any regulatory change or any change in, certain stance from the government or how the market environment is, you would see a segment or a sector being impacted more than the broad market. So like we've seen in the current crisis of pandemic, maybe some sectors like the banking sector were hit more, while certain sectors like IT and all did exceptionally well. So a thematic fund will go through phase where it could underperform for short periods of time. So an investor needs to take longer time frame while making the investment in a thematic fund.
Right. So considering the risks that you talked about and the need for choosing a particular theme or considering the long term that is required for thematic funds, how much of thematic funds should be part of an MF portfolio for a retail investor, according to you?
So when investors, create a mutual fund portfolio, the first thing they should try and do is sit with their advisor, work on a complete financial planning and asset allocation strategy. Once you complete this very important part of asset allocation strategy, then comes to where do you actually invest across asset classes and what would be the approach of investing in mutual funds. So in mutual funds, you should try and create a core portfolio, and the core portfolio could consist of, large cap funds. You could have blend of mid cap and flexi cap funds to complement this, as well as, having thematic funds as a part of a satellite portfolio strategy. So along with your core portfolio strategy, you should have a satellite part which can be, done through thematic funds. Financial planning or investment planning advisors usually recommend that sectors funds should not be more than about 10% or maybe maximum 15% for a very, very aggressive investor. So the ideal would be somewhere around 10 to 15% for aggressive set of investors. However, Nidhi, I want to point a very important thing that we have been seeing, that globally there are a lot of disruptions happening and a lot of themes are emerging which are currently not present in India. Like we can see, electric vehicles or robotics, artificial intelligence, these blockchain, these are coming out as huge themes. Now, if these themes want to be played out by investors, they can supplement this by investing in global funds. We've seen many, countries provide advantage to investors of playing some of these themes which are not present in India. A very interesting data point is 97% of the world's market cap is outside India. So India actually is only 3% of the world's market cap. So if you want to play many themes, you should also explore it with the help of global funds as well.
That's an interesting point, Mr. Shah. So if I may ask that, within themes, what are the themes that, are that investors should look at within India? Like you said that, they could look at global funds as well, but there'll be Indian themes as well. So which are the themes that they should really look at and which hold promise in some way?
Sure. So Nidhi, like I mentioned, investors should invest in themes which are structural in nature. So when you try and make investments, we keep saying that you should make an investment with a goal in mind. And the goal in mind could be, for your retirement or for your children's education. you could have many such goals, or you could have shorter goals, like, planning for a, world tour or some sort of a dream vacation that you would like to do. So once you have your goal very clearly laid out, you have to decide what funds will complement and help you achieve those goals. So investors should invest in themes which are structural in nature, which means that you can have an investment time horizon which is very, very long. See, if you see India, and like you said, what are the themes that are present in India? When we see India, and India has a population of 130 crore people, but the median age of India is 27 years. This is one of the best demographic profile of countries that we are living in, which provides you an investment universe where a large part of Indians will be working for the next 2 decades and will becoming the natural consumers. So consumer is coming out as a huge theme which investors can play. And this theme is not relevant for 1 year, 3 years. It can be played over maybe 1 decade, 2 decades, or even 3 decades. So it's a very structural long-term theme that we can see. Another long-term structural theme which can be visible is healthcare. And this pandemic has absolutely taught us that, what is most important is not wealth alone, but also your health. So
Absolutely.
healthcare is coming out, as a very, very important theme. And when you see a large part of the population as large as India, 130 crore people, and we've seen how beautifully the vaccination drive has been carried out by the government, yet it has taken so long to vaccinate such a large, audience of people living in this country. Healthcare will emerge as a big theme because you will want to play healthcare in various ways, through diagnostic companies, through hospitals, through pharma companies. And all of this again presents a long-term structural theme. And the third, is a banking sector, which is a sector very close to our hearts because we are part of the financial services industry. So when we see banking segment, we have as a percentage, if you see mutual funds, the industry we represent, less than 5% of the people of India have investments in mutual funds. When you consider, products like insurance, less than 10% of the people in India have an insurance product. So when you go to many such industries, be it credit cards, broking, we see that the financial services industry is going to see a sea change and a structural theme. So, maybe a consumer, healthcare, banking, and financial services are long-term structural themes which we believe will be relevant for the next maybe 1 or 2 decades. But what investors need to really understand is that they should have their investment time horizon longer when they invest in a thematic fund. So when you make your investments, your ideal time horizon should be at least 5 to 7 years. That can help you take advantage of this entire structural change that we are seeing play out. And as I had mentioned earlier, we believe that thematic funds should be played as a satellite portfolio to supplement your core diversified portfolio that you create.
Right, Mr. Shah. So, like you discussed, there is higher risk, but there's higher potential also. So, does that also mean that thematic funds can generate a higher alpha for the investors?
Nidhi, you pointed a very important thing. Can thematic funds give you alpha? Because if thematic funds cannot deliver you alpha, there is no case for investing in thematic funds. You would be rather investing, in diversified funds. So we've seen, when we see across sectors, we've seen that the themes that we discussed, be it consumer, healthcare, or banking and financial services sector, has actually outperformed, the large cap segment, which you call as Nifty 50, or, the broader market, which is Nifty 500, over long periods of time, be it over 5 years, 7 years, or 10 years. And they've been able to deliver significant alpha for investors. However, one important point that needs to be considered is the performance of thematic fund, tends to be more cyclical. So when you take an investment time frame of say 6 months, 1 year, you would see that some of these thematic funds could underperform a large cap or a mid cap fund as well. But when your time frame becomes longer, which is more than 5 years, 7 years, or 10 years, if you have got the right theme, then you've been able to deliver alpha. The most important thing, Lidhi, like we discussed earlier, was that you have to figure out whether this theme is structural in nature and has a large investment universe, which can help generate returns over long periods of time. So definitely there is huge potential for higher alpha, and the only caveat is investors should take a long time frame.
Okay, absolutely. Long-term investing is something that, equity investors have to keep in mind, irrespective of the category as such when it comes to equity. So this brings me to another question, which is that, there is a possibility of picking up winning stocks when it comes to thematic funds. But we are seeing the launch of a lot of ETFs in this space, thematic ETFs. So what are your views on that? And why do you think that trend is happening?
So Nidhi, you've pointed a very excellent question. Why we are seeing thematic funds on the passive or the ETF side as well.
Right.
View has been very clear in this, that it is not a game of active versus passive or active or passive. It's always going to be active and passive. So both products need to coexist for an investors because they provide larger investment options for investors. When it comes to investing, active funds, if they are managed well, have the ability to deliver significant alpha, like you rightly pointed out. And we've seen time and again, well-managed active funds, be it in large cap space, mid cap space, or thematic space, being able to deliver alpha over long periods of time. However, there are few funds which are not able to play the theme properly. In that case, there are passive funds which are low cost solutions, can absolutely mirror the portfolio of the index, and can provide another investment options for investors. See, one thing that the beauty of thematic funds is that the thematic fund just states which segment of the market or theme that you can invest, but it provides the flexibility to the fund manager to choose stocks within large cap, mid cap, small cap segment as well. And if you see 2021, it's one of the most beautiful years where we've seen large number of IPOs coming and being able to provide a large universe options for investors. Now, as we see capital markets growing, you will see many more companies coming to get listed, which means your pool of investments goes up significantly. Some of these stocks will take time to be part of the benchmark. So a fund manager who can actively choose stocks from the existing pool as well as stocks which are coming in the primary market can have the flexibility of investing across blend of large, mid, and small cap, should be able to deliver decent returns and maybe better returns compared to the index. However, there are a lot of investors who are cost conscious, then passive or ETFs come out as a very good investment solution. One key advantage a passive fund provides, Nidhi, is that it also gives you the advantage of playing the volatility during the day. So an ETF can be bought during the market day, which gives you the participation of the entire day and can give you the intraday price differential benefit as well. So a lot of institutional clients actually use passive funds or ETFs for making investments where they can take advantage of mispricing in markets as well. But for, I would say, normal retail investors, they can invest in well-managed active funds. They should do an SIP or a staggered investments for maybe long periods of time, maybe like a 3 or 5 year SIP, so that they get the advantage of corrections if there are during this cycle, and can be able to get a better investment experience. And last thing, it's not active or passive. Like I stated, it's active and passive, and it improves the choice an investor has while making investments.
Right, Mr. Shah. So another thing that I wanted to ask was that, and kind of summing up the conversation is that since you mentioned that, these are cyclical in nature, so investors would know when to enter, especially with NFOs coming up when, a theme is in vogue or in trend. But how do they decide the exit point? Or would you say again that, a long term might help with that?
Yeah, so Nidhi, a very important point that you raised is when should you enter and when should you exit from a particular fund or a theme. And I think that the most important point when it comes to investing is to know why you are investing. And let's go back in history. In 1992, when market was at 6,000 levels, people thought that was the all-time high levels of the market. Should I
Right.
exit from markets? And market surprised us. And maybe 10 years down the line, market hit another high. And maybe after another 10 years, market kept on hitting highs and new highs. So an index which started with a level of 100 must have hit so many lifetimes high as it reaches more than 60,000 levels. So the question is not whether you are entering or exiting at the right time. The entire approach has to be, when I'm making my investment, is it with a certain purpose of investing, right? And if, like we mentioned, your purpose of investing is retirement or your children's education, and the goal is 20 years from now, why should you exit from a fund which is doing exceptionally well? So the entry should be based on your financial planning, the surplus which is there with you, and based on your asset allocation strategy that you would do sitting with your advisor. The exit would depend on, are you closer to your goal and do you need the money for your financial uh, goals achievement, right? So in case your goal is still 10 years from now, and you have to retire 10 years from now, what is the point of redeeming your money and keeping it parked in a bank account which generates much lesser returns compared to what could be a potential return equities can deliver? So the point is not looking at market levels while investing. Now, timing, when it comes to thematic fund, the only point that investors need to consider is that, because, as I mentioned, thematic funds are more cyclical in nature, they should try and enter into a thematic funds when the news flow is negative, prices are significantly have corrected from their peak, but the long-term structural story of that theme doesn't change. See, if you are very positive on, say, banking sector as an example, and we had seen the crisis last year and many of the banking stocks had corrected 30%, 40%, 50%. But you believe that this structural change will continue in India, maybe that was a good entry point for you to make your investments. So try and make your investments when you feel the environment is not very conducive from sentiment points of view, but provides you a better price point of entry. And like I mentioned, the ideal investment time frame is 5 to 7 year period when you make an investment. So invest in thematic funds which are structural in nature, so that even if you get the wrong timing, which is the entry is wrong, if you were to invest for long periods of time, you will have a better investment experience.
Yeah, thank you, Mr. Shah. So to sum up what Mr. Shah told us was the main points to keep in mind for our investors and viewers are that, it is absolutely necessary to keep a long time frame in mind when you're investing in thematic funds. And some of the sectors that you mentioned that you could watch out for is consumer, healthcare, banking, and some others that you mentioned. Plus, of course, the financial planning has to be at the core of every investment decision that an investor takes. So with that, I would sum up this session, Mr. Shah, and thank you so much for being with us and sharing your insights on thematic funds. And it can be a really interesting addition to the portfolio, like you said, as a satellite part of the portfolio. So for our viewers, if you have any queries or observations regarding thematic funds, please do write back to us at letters@outlookmoney.com, and we'll try to address them through our query section in the magazine. Thank you and good day to you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.